It's quite a busy economic schedule for next week, full of numerous data from both sides of the Atlantic and the Antipodeans too. As we know, Europe's debt problems are far from over, if not intensifying, and global growth is flagging. But what should markets be keeping a close eye on next week? Joining me now is Brenda Kelly, Senior Market Strategist at CMC Markets in London. Brenda, in your opinion, what events and data will be impacting the markets the most next week?
I think in many respects it will be down to the central banks across the globe that will really impact, certainly when it comes to some of the minutes from the Bank of England and also from the Reserve Bank of Australia, will give us a clue as to whether these banks are going to indulge in more quantitative easing or indeed, in the case of Australia, lower their interest rates. So I'd say that will really affect both the commodity currencies as well as the commodities themselves going forward during the week.
Last week, the Bank of England kept its key interest rate at the record low of 0.5% and refrained from pumping more money into the British economy. Now, most economists think growth will be sluggish for the next few months at least, while there's also doubts as to whether inflation will fall back to its 2% in the coming months, like the central bank is predicting. What's the likelihood of more QE in May, and if not in May, then later on in the year?
Well, the school is out really on that. Given that the last time they met, oil prices were at pretty much record highs, and it did seem that a lot of the fundamental data coming in for the UK was on the good side. So I think in some respects we would probably still see the rates remain at 0.5%, and ultimately it does look like the majority of the members of the Monetary Policy Committee have kept it at that particular point. As to whether they'll indulge in further quantitative easing does remain to be seen. There are two different members, Adam Posen and David Miles, who have said that they should actually resume the asset purchase programme, and their views are very unlikely to have changed later on this month. So ultimately I think it will depend on whether the inflation rates come good later on next week, and also some of the consumer confidence data that comes out. That should ultimately give us a clue as to what might happen in the near future with the Bank of England.
Now, there's renewed concerns that Europe's crisis is spreading, highlighted especially by Italy over the last couple of weeks, and indeed Spain. Now, the rate on Italian bonds had fallen in recent months, but markets are again becoming nervous about Italy and Spain's ability to hit deficit targets. What's your outlook on both of these economies right now?
Well, both governments in Italy and Spain have announced these deep spending cuts that are basically trying to hit these stringent deficit targets and reduce the cost of borrowing on the international markets. Now, we've seen Italy come out and look for 3-year bonds, and they've paid 1% higher, and also the bid to cover ratio was lower than that of the last outing. So in many respects, I would expect that the ECB will probably restart the government bond purchases rather than offer another LTRO offering. I would say, in fact, that this will be something that will resume next week, possibly not to the greatest degree as we saw maybe in the last quarter, but given that we're seeing Spanish 10-year yields up close towards the 6% mark, which is kind of danger zone. Italy's not so much so, but certainly looking at a higher level as well. So I would say that would be something we could see happening in the near future, just to see those Italian bond yields and the Spanish bond yields pull back. But it is, once again, merely a sticking plaster for what is quite a difficult problem, because it does look that these spending cuts and the austerity measures are really impacting growth, and once you have no growth, it is difficult to climb out of that mire.
To end then, Brenda, what about currency pairs? Is there any you see being particularly volatile next week, or perhaps a good opportunity to trade with?
I think the dollar-yen has been one that I've been following quite a bit recently. We saw quite a big breakout there quite recently when the Bank of Japan said that it was going to resume its asset purchase program, and effectively they're printing yen as a result. So we've seen a little bit of weakness there in the yen, but we've seen that pull back recently, and I think it could actually come back towards the 80 level, and that may give a buying opportunity, because generally speaking, with the quantitative easing possibly coming out in the US, we may see a rise off that particular level. It also coincides with the 200-day moving average, and this generally is quite a supportive level.
Thank you very much, Brenda. So there we have it, Brenda Kelly from CMC Markets on the week ahead for markets. Now, next week we'll have more press reviews, interviews, and of course targets in focus. But for the moment, goodbye.